Hi guys, so I had an interesting question come through. It is, are you eligible for tax deductions on business purchases if you have yet to incorporate? This individual is spending some money on a side project and they want to save money on their taxes. So this is a really interesting question because a lot of people don't realize that your tax situation is not dependent on whether or not you have an incorporated business. So what does an incorporated business mean from a tax perspective? It means that you're formally registered, like you formed an LLC or you formed a corporation at the state level, right? But the IRS does not require you to actually incorporate your business in order for you to have an actual business. Okay, so that's kind of confusing. You can go out and let's say that I decide I'm going to start a cleaning business. I can go start cleaning, and that, if it meets all of the criteria for a business, which I'll show you in a minute, technically that can be considered a business for IRS purposes. I'm required to claim the income, and I can also deduct my expenses. Okay, so you don't have to have a formally registered business. You just have to meet criteria, and this is the IRS website. I'll link it below. But there's 9 things that the IRS uses to determine if the business is, or if the activity is a business or a hobby. Okay, so the bottom line here is, do you have a primary profit motive? Okay, is your primary motive to go make a profit? How much time and effort are you putting into making sure it is profitable? If your primary motive is a profit motive, it's not to like harvest losses, or it's not, I just do this for fun and I bring in some money. If you have a primary profit motive, it is going to be considered a business, regardless of whether or not it is incorporated. Now, you can take deductions for expenses in your business if you are open for business. Okay, so there is also something called startup costs. So startup costs are going to occur before you actually open your doors. Okay, so if you have a business and it is open, regardless of whether or not it is incorporated, you can take those deductions. If you've not opened your business yet, you're going to be stuck with some of these startup and organizational cost regulations. I will link this as well. This is publication 583. It's very helpful for small businesses. But essentially, you're going to have 2 separate categories. You're going to have business startup costs and you're going to have these organizational costs, okay? You can deduct up to $10,000 of business startup costs and up to $5,000 of organizational costs once you open your business. Now, that doesn't mean that if you spend more than this starting up your business, that money's just gone, okay? It's not just gone. You just have to capitalize it, which means you are going to take the deduction across numerous years, okay? So instead of like, say, I've spent $100,000 trying to open this business, I don't lose the majority of that $100,000. I just can't deduct it all at once as soon as I open my business, okay? So as a summary, if you are not incorporated, you can still have a business for tax purposes. The IRS doesn't care, okay? The only thing that limits from a federal tax perspective is what kind of business the IRS has you being taxed as, okay? You have to have like an incorporated business in order to make an S corporation election, that kind of thing. But you can run a sole proprietorship and you can have a partnership even if you're not incorporated. So you don't have to be incorporated for that. You can run a business without ever incorporating. There may be some legal regulations that prevent that, but from a tax perspective, you can run a business even if you're not incorporated. You can take those deductions on your tax return. Okay, your business does have to be open though. The business is not open, you can't take those deductions. If you never open the business, there's some regulations on whether or not you can deduct the expenses that you spent trying to open this business, right? If the business is not open yet, you are going to be subject to these organizational costs and startup cost regulations.